Good afternoon, ladies and gentlemen, and welcome to our Thursday webinar today. My name is Matthew. I will be taking you through. Today we want to look at the qualities of a successful online trader. I hope everyone can see my screen and can hear me well. Please, if you don't hear me, just comment below there and I will check on my tools back here. Also, if you have questions towards the end, please make sure that you type them on the questions section. That's why we will look at them and answer. Let's proceed. So, qualities of a successful online trader. There are qualities you need to have, there are characteristics you need to adopt, and it's just things that you have to develop yourself. There is no one who is born a trader. You make yourself a trader by learning and practicing and acquiring the qualities that you require to be successful in your trading. So number one, you need to have a watertight plan, and even having a plan, you need to know how to implement it. That all means that you have to stick to it. There's no successful trader that will last very long without having a game plan for every trade. So you need to have a specific plan that for every position that you're getting in, you know what is the position size, where are you going to enter, where are you going to put your stop loss, and where are you going to put your take profit when you're exiting the market. Part of the plan also is knowing whether you're going to use a market order or a pending order, right? For example, at times when you're waiting for news, we have high impact news. You're waiting for news for the people who trade with fundamentals. You know whether you want to enter with a pending order, sometimes preferred. But if it's in the market again and you're waiting for breakouts, again, it might be using, we will be using pending orders or market orders. And at that point, where are you going to take your profits and stop your loss? So that's part of your plan. Do you have a plan? All right, very important there. So if you want to be successful again in trading, you have to be flexible with your take profits. Yeah, sometimes settling for less, if you judge that it's all that you can take out in the market at that time, right? Remember, you use your risk amount to place the target that you're looking for in the market, right? So if it happens that you are targeting maybe a higher reward in the market, but according to your indicators and the way you're watching the markets, like it's not achieving the levels that you're waiting for, then you might consider taking out your profits. All right. Other times, a successful trader might want to extend their profits if the market developments are shifting in your favor, but do not move the stop loss orders from the original settling unless it's a favor of the position. In this regard, you might consider a trailing stop, okay? A trailing stop, so that if the market is working towards your analysis or towards your setup, then you might want to keep on following, right, your profits and locking in profits using the trailing stop. So make sure you have a plan. Once you enter a trade, where are you going to take your profits? Where are you going to take to stop your losses? If you don't have that in your trading plan, then that is equally likely to gambling, because in gambling you don't know what you're targeting, right? But again, even a good gambler would want to know what they are targeting, right? So in forex trading, if you don't know where you're putting your stop loss, where you're putting your take profit, then that's what is equal to gambling. But a successful trader always knows where they want to put their stop loss, where they want to put their take profits. And maybe the best places or the better places for you to check out for stop losses could be along swing points. If, for example, you are riding a trend and you find yourself get in at that point, consider the previous swing as a potential stop loss level. That is, if you were buying, all right? If you were selling, consider the previous swing as a potential stop loss level, but make sure that you consider the distance in between the entry and the stop loss, because that one again is very important with regards to your risk amount. Very important. Another good characteristic that you require is you need to know how to manage your expectations. As a trader, it can be easy to become obsessed with chasing profits, and of course this can lead to problems. It has been proven over time, when you get very much anxious with profits, that one is likely to cloud your judgment and leads to mistakes, right? Where you, for example, you've placed a trade and you've got a profit, a nice profit this time round, and now you lose the objectivity and you want to keep on placing several trades with almost the same structure that you saw. Well, it might give you profits, but what we mean here is any trade that you're entering, consider it as a new trade, and it's equally risky like any other trade. So you can anytime the price can change anytime, right? So you need to consider any trade in its own merits, so that even if you get profits, you know that you have to execute your plan fully for you to get profits in the next trade. So always consider each trade on its own merit, because the, 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 the trends can always change. The market is always right. It's only us who can be wrong in the market. So our first bit of advice to you is that dispense any unrealistic objectives. You need to have objectives in your trading. Like for example, when you already know how much you're risking in your account that one gives you of what you can target in the market. All right. So make sure that you peg your returns, or what you're looking up in every single trade, to the amount of risk which you're taking in the market. All right, the risk amount, and the risk amount is what you're losing at the stop loss level. And I'll keep repeating this: if you have $100, you're advised not to risk more than 2% of that amount. So if you calculate 2%, that is 2 out of 100 multiplied by that amount, it's going to give you a risk amount of only $2. So what it means is that without risking your account a lot, how much return would you be expecting from this amount of risk? All right. And if you're looking forward, depending with the risk reward ratio that you're using, if you get a higher reward, then of course, you can make it. If it's, for example, 1:3, then you know the maximum you can get or you can expect there is $6, right? But you cannot have this account and taking the recommended risk amount and you're expecting to get $20 in a single trade or $50 in a single trade. It's possible, yes, but you need to know, you need to have realistic expectations to avoid the problem of not taking up your profit, not locking up your profits when you get them. Because the problem with people who have unrealistic objectives is that you have taken the right risk, yes, and your profits, and you're getting into profits, all right. Instead of getting in and booking your profits, then you keep on expecting the market to keep on trending in your favor. But at some point, it changes, and you might again start losing. Maybe what you might want to use is the trailing stop. Again, very important. This is how a trailing stop does. If you are riding a trend maybe upward this way, maybe you entered your trade at this point, and that's where you entered E, and you had your SL here. Now, if let's say, for example, your trade has moved all the way to this level, that level there, and now you are in profits, and you see the developments in the markets are still favoring your your order, right, or your trade. You can have this stop loss up to close those profits, all right. So you can move your stop loss to that level. So if the price keeps on moving high, and of course favoring your trade, then you might again consider to push your stop loss again up. You push your stop loss up. So in this case, what you're doing is that you're trailing your stop all the way up until you have your stop loss at a level where now the price makes a pullback and hits your stop loss, and there you have your profits taken up. All right, that's one way that you would want to ride a trend. So very important there, have realistic objectives in the market. It should be pegged on the risk amount that you're taking off your account. So if you want to become rich quick, it becomes extremely hard for you to be successful in Forex, because you find yourself developing greed, and you want to risk a large amount of money so that you can generate a large amount of profit, which doesn't really which doesn't go in line with the risk in the market. So make sure you have realistic expectations. Manage your expectations. Manage expectations well. Yes, Nelson, can you hear me better now? Okay, good, thank you. All right. Next thing you need to really be up on is the market events. Yeah, when you're trading, remember we were using technical analysis, and then there is fundamental analysis. There's even sentiment analysis. All right. So technical analysis is where you're using all the indicators of your choice. You're using maybe moving averages. You're checking out on maybe ATR to help you in placing your stop losses. So you can use technical indicators to help you get the best entry points in the market. All right, but something very important, remember those financial instruments that you're trading on, whether it's commodities, whether it's stocks or currencies, there are social, political, and economic events that if they happen, they can affect the strength of that given asset. And for that reason, you need to know the market events. There is an economic calendar that always gives you the news and events lined up every day, right? Whether political or social, and that those events can help you to know the expectations in the market. Of course, there is impact, different levels of impact. Okay, you have high impact, low impact, medium impact, and mostly if you find it's very high impact news, you want to be sensitive on those news. So even if you're a technical trader, of course, you should pay close attention to the fundamental news, because if you have a reliable trading strategy and you have several technical indicators getting you some insights or good setup for a long trade or a buy setup, check the economic calendar, make sure that there are no upcoming events that could maybe have a negative impact. So even if your technical trading strategy works perfectly, fundamental news or fundamental events can change everything. Make sure you stay up on the game. Successful traders are prepared for upcoming economic calendar data releases in that week. And every Monday for us, we will give you every Monday of every week when we are doing our briefing at 9 a.m. in the morning. We will give you the major events that are lined up for the week, and that's what you need to take note of. When those news are coming up, you want to make sure that you want to wait and make sure that they are in line with your trades that you're executing. So who are the scheduled speakers, for example? Here we're talking about the representatives of the central banks for the big currencies and the big economies, but it depends with the currencies you're trading on. But announcements by the Fed, the Federal Reserve, is something that you would want to consider, because of course you know US is a global currency, right? It's like a global reserve, and it has widespread effects on major currency pairs if you're trading on majors. Again, depending with the pairs that you look at. So keep up with the markets. Again, like the central bank interest rate setting, they affect the inflation, all right? Interest rates affect the inflation, all right? And equally affects the strength of a currency or weakness of a currency. Higher interest rates or announcements that are made that signal or favor a rise of interest rates, that is hawkish news. Of course, they signal a likelihood rise of interest rates, and that one is likely to cause a strength of our currency, for example. So if you're looking to go bullish on that currency and then you have hawkish news coming up, those are announcements that favor higher interest rates, then of course you know that you're on the right, you're likely to have a successful trade. It increases your probability. Other important gatherings of leaders like the G20 meetings, you need to follow up on them just to know the likely movements, the likely progression of the global economies. So keep up with the markets. It's very important for you as a trader. Now, in Forex, remember it's a risky market, right? And you're risking an amount of money looking for one to get a profit. Here you have profits and losses involved. So when you're talking about emotions, remember when you're making a loss, when you lose something, you feel bad. When you get profit, you feel happy, right? So how do you control those two events? Because they can have a negative effect to your trading. So a successful trader has to control their emotions. Whether you're getting a profits, control that happiness that you've got, that euphoria. Don't let it carry you, right? Whether you've got losses, control that bad feeling. If it has to make you stop trading for quite some time, you might need to do that because it's really important. Because when you get caught up in negative emotions, then it's like a ripple effect. When you check your screen, you can see those that picture there, just showing you preventing a ripple effect that might cause you even greater losses all along as you trade. So the greatest enemy to successful trading is not the traders or even your broker, it's yourself. You need to study yourself, know how do you feel when you make a loss, right? And that one again is pegged to the risk amount which you're taking. Have you taken time to understand your risk appetite? How much can you lose comfortably? That one again depends with the amount which you have in your account. How much can you lose comfortably? What percentage of your account can you lose comfortably? But again, a word of caution, even if you can withstand a bigger loss, a bigger percentage of loss from your account, don't again risk a lot of it so that it doesn't get into your nerves, doesn't start affecting your emotions. So many beginners, when they're getting into trading, you want to stray from their careful designed trading plan. You want to leave your plan, and you just want to follow successful trades, a series of successful trades, and then or sometimes get depressed after a losing streak. Okay, don't really be so excited whether you lose or whether you gain. Maintain your cool. Okay, so in trading, strong emotions can sabotage the rational analysis of your setups and can lead to poor results. Remember, you need to maintain your objectivity all along. Like a successful trader, you need to know how to manage the state of your psychology. Take time off when you feel emotionally unstable. You've got losses and you cannot really get hold of yourself and start trading again. Leave it for quite some time. It's okay. You're not losing your money, right? It's always better than getting back and making bigger risks and then you're losing. Okay. And one of the problems here is like, for example, you are losing and then you start trading to recover your loss immediately, placing bigger lot sizes, risking bigger amounts. Now you start even forgetting how much you should risk. Okay, that one is really important, that you control your emotions in trading, whether you're making profits or losses. We might think that emotions coming when you're losing, but you have emotions even when you're getting profits. So make sure that if you get a profit, you don't get so much excited. Of course, you have to be happy because you're making profits. There's no one who would be happy making profits. We get happy when you make profits. But then, does it make you to think of jumping into another trade just immediately after that one so that you can make another profit? Because our minds are wired in a very funny way. The human brain is wired in such a way that you would want to keep on doing that which brings pleasure, right? For us as traders, what brings pleasure is profits. So you get profits, you want to keep on doing that, placing that trade and getting profits, right? And that which is causing pain, if you're losing, your brain tends to influence you to reduce it. That is almost ingrained in human brains. So that is what we need to control, right? So that you don't feel a lot of pain when you're losing because you have controlled losses, and you don't want to be carried away by euphoria because you've lost just a single trade. So check on your emotions. and make sure that the technicals that you are using in your trading, you keep up with them. One very common scenario is where you have a set of indicators that you're using, but then you have a very nice setup that might be coming up in the future. You've set up a very nice trend line and you're waiting for that trend line to be tested, waiting for a bounce or a break, but you don't actually get it at the exact time because you are not keeping up to date with the indicator that you're using. And then you find yourself taking trades that are not, that you've not even seen their confirmation or gotten their confirmation. So even if you're not pursuing a technical based trading strategy, it's important that you know the technical levels very well. They can help you. They can help to give you a trigger. If you are targeting a certain level, how then you do know that that level is reached? You could just use a simple trend line to help you see when that level is attained and broken. And it can even help to see that there are, it's a very significant level that you can get a good entry. If it's a moving average, can help you to get the trend and smoothen the movement of or the noise of the market to give you a good entry. So it's good that you keep note of those areas: support, resistance, moving averages, and of course highs and lows, depending on the type of trade again that you are and what you like using. Make sure that you keep up to date with your technicals. They can really be very helpful if you want to get good setups, right? And sometimes you might want to stick to a few technicals. Don't cloud. It's not good to cloud your chart with so many technical analysis tools, so many indicators, because you get tired, right? You want to get interpretation from you want to get information from the crossovers of moving averages. Again, you have um, support trend lines, right? And you're looking at a momentum and then the strength from the RSI. Before you get a confluence of those indicators, you will find yourself getting an entry too late, and again you're getting so tired to interpret all of them. So you want to keep your indicators at least a bare minimum of like 2 to 3, and just keep it simple so that you won't get tired trying to find a trade or an entry position. So keep up with your technicals and keep them at the best minimum. Let me say the best minimum that you can use. You need to know the market environment. So this is where you want to know, are we on an uptrend? Because I always say that as a trader, our biggest problem is to know whether we have an uptrend or a downtrend or a sideways trend. Because if you have an uptrend, if you can get an uptrend in the market, then the best opportunities you have is to buy as the price bounces off those very important support levels. All right. If it's in a downtrend, then your best opportunity is to sell along those levels when the price is making contact there. All right. But again, we have on the flip side, if it breaks outward, then you can get an opportunity to sell. If a downtrend price breaks upwards, then you have an opportunity to buy. Okay. So the number one thing as a trader that you should be looking out for is a trend. Make sure you can see a trend, right? And if you get a trade that, of course, is in line with the trend, might be better for you. But of course, watch out whether it's a bounce or it's trying to break out or it's trying to follow the trend. And you can make that decision. Of course, from our courses, we've shown you how you can target those levels and ride a trend. So it's very important, know the market environment, because you find one challenge with traders is that you want to get to lower time frames and you forget that we have higher time frames. For example, you might have this setup here, and this could be on a 15 minute chart, right? This is really very short term, and you find it's like we are on an uptrend, but you've not maybe checked out on a 1 hour and or even 4 hours and realize that it's a whole downtrend. This is just a small pullback. okay? And without that information, then it becomes difficult for you to know the best levels to exit, right? Might be on a very nice trade, but again, you don't know that in the long term, this might be a down trade from the higher time frame. So you're waiting for the price to keep on moving higher and higher and higher, but then you get caught up when the the price gets back to the trend. So as a trader, you need to know, watch out the market environment. If the market is trending, the aim is to trade in line with the trend more often than against it. You don't want to go against the current. It will sweep you. At the same time, a successful trader should know that trends pause and frequently correct, and you should be keen to take profit and minimize loss are the key technical points as the larger trend unfolds. That's what I just explained. So maybe to mention is that check out whether you can do top-down analysis. That is, even if you trade and manage your trades at the 15, for example, 15-minute time frame, you're a day trader, or maybe 1 hour, take out some time to check on what is happening on the daily time frame, right? Is it really in line with the type of with the entry you want to make on a lower time frame where you're managing your orders? Really, really very important. So if the environment favors range trading, then of course you switch to how you can trade the range trading, right? If it's selling near the top of the range or buying at the bottom of the range, make sure that you are aware of the market environment. So for the successful traders, if you are in range trading, then you have defined an ultimate point where the range is likely to be broken in order to adopt a new approach. Basically, you will have the movement like this. Now you're on a trend, because all along you'll move from a trend to a range. The range can either be broken to another trend, smaller trend, and then the trend might change again to another trend. So actually in forex trading, you're just getting from a downtrend to a range to another downtrend, for example, to another uptrend. The uptrend might break down once again to another downtrend. So it's all about trends, ladies and gentlemen. And if you master these switch points, it's very, very important. So identify the market environment, and you will check whichever trading strategy you're using, actually the trends really matter. Whether you're looking for volatility, whether you're looking for the demand zones or supply zones for you to enter the market, you're actually looking for trends, right? And this one is based on the support levels and the resistance levels. So know the environment in the market. That will be very important for you and help you to be successful in your trading. Something else, protect your profits. Check your profits. It's always very important that when you're placing your trade, you know what you're targeting. And I always keep repeating this. If, for example, you have a certain amount of money, how much are you risking for that amount of money? Because that is what is going to give you the amount that you should be expecting. Again, just connecting this one with having a realistic target or objective in your trading. How much are you targeting in your trading? Are you just getting in to place a trade and make just any profits? Yeah, you're not putting a good amount in your trading account and then targeting very little amount. Again, what will tell you whether you're targeting something very little, the risk amount that you're taking. All right. So successful traders will always take profits and minimize losses. You want to maximize on the profits and then minimize on the losses. Modifying a stop order or squaring up completely and stepping back after a profitable market movement. It's really very important. So you need to know when you should get out, all right? Take the profits, get out. You need to know when you can wait for longer, all right? And you need to know where not even to enter a trade, because if it's not in line with your profit targets, you might not want to get into that. So, and that one, where protecting your profits come a little bit earlier. If you can't see the profits that you're actually targeting, then you don't even have anything to protect. All right. So before you entering a trade, can you see a potential that you can make the profit targets that you have, and what mechanisms do you have to protect? So always have a take profit and have a way of booking your profits. So this is one of the things I mentioned earlier, modifying a stop order, so that if this is your trade moving up and up and up, and initially you had your stop loss at that level as you entered at this point, and this is your SL. Let me use a different color for this one. Okay, now you're in profits all along. These are your profits moving up and up and up and up, and your stop loss is down there. You might want to keep on shifting your stop loss higher as the market developments are showing up. So here you're in profits, well, but here you have your stop loss, right? So the stop loss shifts from the entry level, and now it is trailing your profits. It's called actually a trailing stop. A trailing stop, right? This is very suitable when you have a very nice trend and you got in early, and now the development is just an upward trend, an upward trend. Your target is hit. Maybe this is your first take profit level. You take profit one. Now you're moving on forward to the next take profit level. Your TP2, take profit two, and every time your take profit level is attained, then what you're just doing is just moving up the stop loss level. All right, you're trailing the stop loss. So all this is profit booked, and if the development keeps on getting achieved, of course, you even have your that take profit, right? You can again have your stop loss shifting upwards, so that you're trailing your profits using a stop loss order, right? If you've not been using that one, check out, and as long as the price is going the way you would want, you can keep on trailing your profits, okay? Because what you're protecting is if in case this price changes, and now it starts, if the price action changes, starts moving downwards, at the moment it hits that stop loss level, of course, it will close, but now close at a profit, as compared to the event where you would have retained your stop loss on the lower levels and you are very big profits up here. In fact, your take profit was being hit, all three of them, but then something happens and then the market snaps and goes down again, all the way to give you losses. So that's one way you can protect your profits. Another way is just sticking to your take profit levels. And if your take profit was hit, let's say, for example, your take profit was hit at that level, you just square out and take your profits, and that's all. You're waiting to take another order. That's another way you can, of course, you can consider protecting your profits. Very, very important. And again, when you take your profits, you've entered a trade in a given financial instrument, you've made your profits. Of course, according to your strategy, the market development has taken part, all right? You don't have, again, to start following that trade, hoping to get an immediate profitable trade again. One way is that make sure that at least if you've gotten a profit there and the market development has gone the way you were expecting, be very careful when you're tempted to go and start entering, buying again. Maybe, for example, here you got a profit at this point and it's still going up. You're tempted to get in and buy again, right? Be very careful. Yes, of course, you can get an opportunity to buy or enter a trade, but make sure you are even more vigilant and even more careful, because you're likely to start running down your profits again. So protect your profits in those two ways I've mentioned there, and don't forget the stop loss. Do not forget stop loss. Stop loss protects you when the trend changes against what you were expecting in the market. Remember, you can always be wrong. The market is right, you can always be wrong. Okay. And the only thing that can protect us to help you control your losses, and this is what keeps professional traders in the game, that you always have a stop loss. At the level that you have a stop loss, is it a calculated amount that you're losing, right? Let me give an example. Like here you have a trade. Let me give, and of course I'm using waves because always you find yourself entering at the breach, maybe confirmation, maybe when the trade has already reached a previous higher, previous low. If you entered at this point, for example, right, and you want to make sure that you are protected, I wanted to mention about the risk amount. I'll always keep mentioning this. And this is what makes difference between someone who gets stopped out. You always hear people speaking about my account blown. I don't know, lost everything I had. You put your money and you've lost everything. You don't have anything else to trade. And that's where negative energy gets in. And you start thinking that there is someone who's influencing the trades for you. No one is doing that. The only mistake you do is that you're risking your everything. If, for example, you have $300 in your account, all right, the distance between your entry and the stop loss, if, for example, the trade doesn't go the way you are expecting to give you profits, all right, instead it takes a turn and now it goes all the way to hit your losses, to hit your stop loss, how much are you losing at that point? So if you had a $300 account, for example, are you losing $50 at that stop loss level? Are you losing $10 at that stop loss level? Are you losing $2 at that stop loss level? What percentage is that? For example, if you're losing $50 at that point, then you know how much are you risking of your account. It is $50 out of, if your account is 300, multiplied by 100, then you see what percentage of your account is that. We see whether it's healthy, right? I don't know. Is it, do you do maths? All right, we have it that way. So this could be like 50 divided by 3. I don't know. 50 divided by 3. How much percentage is this? Around, is it 16, 15, 16, 16%? Around there. So here you're risking 16% of your account. Is it healthy? It depends. That's not healthy, right? But again, depending with your risk appetite. But again, whether you take higher risk, you should not be risking 16% of your account. If it is 2%, if you do 2 out of 100 multiplied by 300, then is it healthy? Again, this is going to give you 6% of your account. Yeah, it's 6%. No, $2 out of 300, sorry, multiplied by 100. We mixed up things there. And this is like 2 out of 3. This is 0.6%, something like that. That's what the risk you're taking of your account. If, for example, it is $10, it's $10 out of your 300 account times 100. How much are you risking there? Then, of course, you can see you're risking, is it a 0.1 divided by the 0.3? 0.31 out of 3 is 10 out of 3. No, it's like 3%. Yeah, it's like 3%, right? 3%. 3%. So how much are you risking of your account is really, really very important. And at the stop loss level, I had to insist on this. Make sure that you are not risking a big amount. So the thing is, if you are risking 3% of your account in this when you have your stop loss level hit, there is no way in which you're going to lose all of your account. Again, once you start considering the risk amount, here, then of course something else comes in, the lot size that you're using. So make sure you consider that one very much in line with your stop loss. As you're placing your stop loss, ask yourself, what is the risk amount that you're putting there? And for you to have the desired risk amount, what is the lot size that you're putting there for every single trade? Very important. That's the game changer in your trading. Yeah, of course, in addition, I'm assuming that you have a successful trading, a very nice trading strategy. The next level is managing your risk, and that one you achieve by using stop loss orders. Very, very important, ladies and gentlemen. Um, again, keep track of your record. We say that learn, keep on learning, keep on get information from your mentors, right? Ask questions, come get education from us. We offer it for free to you, by the way. If there's something I've passed very fast there and you don't understand, get to our training and we'll cover all those things in detail, one-on-one, right? If you're in Nakuru, for example, if you're in Nairobi again, we have the A to Z training sessions. So you can get all that information. So keep learning, and even as you get information from mentors and educators and YouTube channels and other education channels that you're following, the number one thing that you should be learning from is your own trades. Yeah, learn yourself. First of all, start by learning your risk. What do we call it? Learn your risk appetite. How much can you risk? And even as you have a high risk appetite, how much is that amount that you're risking of your account? And that risk now, how does it come in your trades? Out of the trades that you're placing, for example, and you've placed like 3 trades in a day, okay? Let's say it's in a week, right? It's a week, and then you have maybe Monday, and you have Tuesday, and then you have Wednesday, blah blah blah, going on that way. And if, for example, you take 4 trades in a day, right? You take 4 trades in a day. There are different ways that you can have a trading journal, right? So if it's on a Monday, how are you placing your trades? How did those trades end up, all right? So that you can learn if it's your first trade, the second trade, and the third trade, and the fourth trade. Maybe you got the first one, you lost the second one, you got that one, and you got the other one, for example. That would be a very nice one if you had those type, or even you missed the last one. And then from these trades, you ask yourself, how much profit did I get, for example? How much loss did I get? For example, here you got maybe $10, and here you lost maybe 3. That's our target of 1 is to, for example, depending on your target, right? Maybe there you got a winning trade, and maybe it went all the way to 15, all right? And the other one you lost again, maybe you lost $3. Okay, and when you check out for that, then you can know what is your win rate. When you look at this trader here, out of your record trade, then you can know that your win rate is 50-50. Your win rate is 50% or 50-50. For every 4 trades you place, then of course you win 2 and lose 2. But again, how much is the rewards? For the losing trades, here you're losing $6. For the winning trades, how much did you win? You won 25. So how do you gauge the success of your trading strategy? That's how you get to gauge yourself and know how successful is, or how good is your trading strategy. And of course, this is for Monday, for example. You go on to Tuesday, you go on to Wednesday, and there are different ways. This is just an example. I've just thought about it, right? You can look for the best ways that you can keep your journal, keep a record of your trading activity, so that you learn yourself, learn from yourself, right? Maybe, for example, you might realize a trend that after the first trade, you win the first trade, and you win the second trade, you lose the third one, and you have a tendency of always losing the fourth trade, the last trade. Then maybe you might understand that now, the moment I've taken 3 trades, then I have a problem. I have a higher probability of losing the third trade. So you can even consider stopping doing 4 trades in a day, and you have 3, because you have a higher probability of losing the third one. So you keep learning yourself, you develop good habits depending with how you yourself you performing in your trades. Okay, remember, we the trainers and the support you get from mentors, we can only tell you as much, but the actual trader is you. The success that you get in your trading is you. It depends with you. So if it depends with you, do you know yourself when it comes to your trading? Are you aware of how much disciplined you are, or how is your concentration. When do you become really objective? Is it during the first trade? Maybe you may find that after the first trade you will lose out, and the second trade you always get them right. And which one gives you the best returns in the market? So keep record of your trades, maybe each month, quarterly, annually, and your trades, you either made a profit over that period, or maybe you roughly broke even, lost money. Then it tells you whether you should keep on improving, where are you doing something wrong, and you can always keep learning and running your trades well. So regardless of which category you fall into, the key to improving your results in the next period is to keep reviewing your track record of your trades, and always keep checking out how you can improve on your trading strategy. So I've always been repeating this: risk a small percentage of your capital. No matter how strong an individual trade setups look, of course, you want to risk a small percentage of your capital, and you will not suffer from stop outs. The way traders want to cry foul of stop outs, want to say, my account has been washed away. So risk a small amount. It may be exhilarating to place a trade with the potential to double your account value. Yeah, but it's not advisable to risk losing your entire account just because you want to become rich immediately. You have $100, you have $1,000, and you want to make it 2,000 within 1 week. That one will always make you risk a lot of money. That's not desirable. So limit the amount of risk for each trade, and allow, of course, even more winning trades. What is important is growth, and it should be steady, not really that very fast growth. It's not sustainable. All right, it's not sustainable. And if you find yourself you're doubling your accounts every now and then, be very careful. Check whether you have good risk management strategy and how much you're risking in every trade, because it might be that you're making a mistake somewhere and may not be manageable. So ladies and gentlemen, that is what I had for you today. The next session is just check your questions. We have 5 minutes. If you have anything, maybe I've talked very fast maybe, and you want to ask, this is your time now. Ryder, you would want to refer to these sessions. Yes, of course, we have them recorded. We'll check out whether they can be sent out to you. Nice one. Owen is asking which one is better. Owen, maybe you might want to, which one is better, compounding an account or withdrawing a percentage of profits? Well, it depends with what you want, but always make sure that you can cash out from your profits. Okay, have a way of, it's considered like a business. After growing up to a certain amount, a certain level, certain amount, how much would you want? What percentage do you want to be withdrawing, for example? But I think a percentage will do. Like for me, I would prefer a percentage, but it depends. You might be, for example, want to be withdrawing a percentage and then leave the rest to be growing in the account. All right. Sometimes people feel that they want even to split their accounts. I don't know, but it depends with you. But again, if you're making profits, make sure you can cash from it. It's really very, very important that you earn from your sweat. Remember, this trading is really, it's tough. It's simple, but not quite easy. So when you make profits, have a habit of at least getting something out of it. But then again, make sure you can keep on developing your account. So people have got various strategies. There are some who want to keep their capital at the same level and then keep on withdrawing the amount that they get. It depends with you. Good question there. Owen, want to share the clip? We check on that. Noted your email. Thank you. Recorded. So it seems that many of us want the recording. We will check out. So make sure you can email them to you. You want me to explain what signals are, what they do, and how to get them? Okay, good question. A signal is an advice, just like an advice from an expert trader. Okay, because I'm assuming someone is giving you signals as an expert trader who knows what they're doing. It's like an advice on where you can enter a trade, entering meaning opening, and where you can close, right? So in a signal you're given the price to buy at, if it's a long trade, price to buy at, where you should put the stop loss, and I should be taking your profits. If it's a trade to sell, of course, then you're given where to enter, where to put the stop loss, and I'll take the profits. That's basically what a signal is. What they do, a signal is just to help you get an entry into the market. Because now in that place is where you don't really understand how to trade, and you're not even interested to learn how to trade. Someone is providing you the tips to trade, or simply tips to trade, then that's when you want to get them. How do you get them? Get them from expert traders. All right, expert traders, the ones that are successful in their trading, those are the right people to give you signals. If you want to get signals, again, make sure that you have someone that you know their track record. Okay, and if you get a signal, evaluate it well. Don't just use a signal blindly, because it might not be the best way. So Sylvia is asking, as a beginner, the minimum you can start with, how do I access the practice account before trading? Sylvia, if you want to get a practice account, go to FXPesa.com, and register a demo account. You just require your name, just fill in your name, your email, and put your phone number, and you will get the credentials. So you have the practice account. It is a demo account. That's your practice account before you start trading real. The minimum you'd want to start trading with, Sylvia, it depends with your amount, with your target profits. Checking on my screen, I'll always say it depends with the amount of profit that you want to be targeting, because let's say someone has got $100 in their account. I'll spend this. You have 200. You have $1,000, right? Now, we say don't risk more than 2% of your account, because that one should inform your reward. So your risk, let's say your risk is 2%, then how much are you looking to as a reward? So if you risk 2% of $100 is $2, all right? And if you have a double reward, for example, for, let's consider 1:2 risk reward. So this one means that this one will get, for the same setup, if for example you're trading the same setup and you entered there, okay, you entered here, you had a stop loss here, this distance here is $2. Is the amount of this risk. This is your risk, sorry. All right, this is your risk, and then you have first level there for TP1, and maybe at that point now, this is where you're taking your profit. This is your reward. This is your reward, a double reward, 2 times, right? Now, for someone who has got $100, you get a reward. Looking for a reward of $4. Someone who has got $200, a 2% risk. If you have to keep strictly to the rules and the advice that you should use, you should not risk more than $2. Then 2% of this one is going to be $4. For the same setup, it's going to get $8. I hope you see the what I'm explaining. If it's $1,000, then 2% is $20 for the risk. And for the same setup, if the trade breaks even, if the trade just moves in favor of the trader, then this one is going to get 40. So if you are 3 traders trading the same setup, one with a small amount of capital, the other one, of course, increasing that way, look at the setup or the reward. So how much can you put in your account depends with how much you're targeting. So I just want to ask you, because in FXPesa platform, you can put as little as $5. But now, ladies and gentlemen, let us do a 2%. Let us calculate a 2%, 2 out of 100 of $5 or even $10, and see how much is that. This is like a 0.1, right? Is it? 10 over this is 0.1. So imagine putting a stop loss at a level of 0.1. It becomes very difficult to implement. If it's $10 again, it's going to be set 0.2. So imagine you're putting your stop loss at 0.2, looking for a reward of 0.4. It really becomes difficult to implement that strategy, the advice that you get in trading. All right. So how much you want to deposit, again, it depends with you. How much are you looking to get? You can deposit a low amount, but you don't want to put so little that you yourself see that as if you're not very serious in it. Okay. Good question there. So even may ask, using the analysis provided, should we trust and use it by limits or need more evaluation? Yeah, you need to evaluate it more on your side. For example, when you look at our educational analysis section, remember that one is just to give you insights. You're given the likely movement of the market. So it's up to you to get the best entry levels, but of course, it gives you even better insights of the market. And if you see the preferred trade that you're being advised on is a long position, then if it coincides with your trading, the way you would analyze that that financial instrument, the better for you. So make sure, even as you, whether you're looking for signals from whoever is offering you, remember you want to get advice from someone, but don't let them like decide everything for you. You need to assess your risk, because even as you're being given that signal, remember you need to place your own you need to check on how much you're risking. So it's very important really that you assess and check on any signal that you're being given on any advice on trading. All right, very important. Okay, the shift of the server, Nelson, it is just a change from the server which you've been using, right, to a new server. So there's no problem with that. Just have to log in with the new server. Otherwise, if you're using the FXPesa platform, it will be shifted to you. It will be shifted automatically. But again, during that weekend, please, if you're trading and you wanted to withdraw something, make sure that you do it by end of day Friday, because during the weekend you may not be able to withdraw. I hope that information has been put straight to you through the email. Please go and read it. But there's no need for alarm. It's just a shift of the server. Okay, just a shift of the server to make sure that it aligns with our times here even better. Yes, of course, you can access the recording. Check out on how you can access it. How long is it best to trade on the demo account before moving on to live market? It depends with you, but you don't want to. You want to practice up until you really understand the markets, you understand the environments, you know which strategy you'll be using, right? That's very important, George. But you don't want to keep on trading on demo for years and years. When I say years, you just understand what I mean. You don't want to keep so long on the demo, because there are things you won't understand of the demo. Like what I've been speaking about the psychology of trading, right? I've mentioned a little bit about the psychology of trading. When you get so much emotional, you won't feel any emotion trading on the demo account, because that's not your money. That's not even real money. You make a profit, not a real profit. You make a loss, not a real loss. So you don't even feel any emotion. So you don't learn anything on a demo on emotions on a demo account. So once you get to real trading, now that's when you know that you're using your real money, right? And you really have to protect it, because when you lose even a dime, if you lose even a dollar, that's your money which has really got lost. So you learn more and you learn better on a real account. But before that, don't misunderstand me. I'm not saying that you go learn on the real account. Learn on the demo first up until you sure of your strategy. But then for you to perfect your skill, you go to live trading. Yeah. Because on the live trading, that's where you're learning to be consistent on your profits, all right, while cutting down your losses. Basically, everyone in forex market or everyone in trading, they make both losses and profits. The question is, how much. If it's losses, how much are you losing? If it's profits, how much are you making in that? For a beginner, how can you learn to trade? Open an entry. Faith, if you want to learn, get on board, just go to fxpesa.com, register a demo account. All right, just fill your name the way you've put them there, your email and phone number. You have a demo account, and someone will be in contact with you. Or you can text an SMS join 40184, and you'll be enrolled to our training sessions to get along with it. Best trading strategy, simple to understand. There's I don't know, it depends, but of course, maybe let me mention this, that now that we are saying make sure that you can see a trend, maybe you can use a simple moving average or just a moving average. Okay, sometimes people would want to consider because a moving average will help you see the trend, right? Though I have not said it's not the best, but very simple for you, so that according to the way the moving average goes, then you know whether you're in an uptrend or a downtrend. Okay, but for you need to understand the markets better. Okay, so Thomas, you can join us, attend our classes, and we can teach you even more how you can analyze the market and use even several trading strategies and moving averages and whichever indicators you want to learn. Ladies and gentlemen, we are way beyond 3. Remember, this one happens from 2 to 3, right? But let me answer this one. Is scalping a strategy? Yes, it's a strategy. Scalping means that you're entering a trade and within very few minutes, 5 to 15, you're out and you've got your profit. It's a strategy. You just have to perfect on the best timing of the market when you can get, when the market pulls a very big move. Ryder is asking, they sent you the account ID and password for the demo account. Right. What you do now, go to Play Store. Go to Play Store if you're using Android, or go to App Store if you're using iPhone. Search for FXPesa app. Once you have the FXPesa app, download it, install it. Then, of course, fill those details: the ID, account ID, and the password on those on the provided login panel. Make sure you select demo account and you log in. You'll be able to practice. Yeah, and this one again is very important. Francis Mo here, based on the 2% rule, how can you calculate the number of trades to take per currency pair? What really helps, the 2% rule is on the risks that you're taking. It doesn't actually limit the amount of trades that you can take, right? What matters when it comes to the number of trades that you're taking is, do you have a choice of financial instruments that you look at? If, for example, you have 5 of them, let's say, for instance, for example, right? And you have a trading strategy. Remember, you only open a trade if your trading strategy confirms. So the number of trades that you want to have in a day, it depends with your trading strategy. If it's confirming a trade, then you can enter. But again, the next level on what guides you with the number of trades that you should be taking is how do you feel yourself? Are you tired? Have you been on that chart for like several like looking for those charts for quite some time, and you feel you're getting tired? You listen to yourself. Are you feeling tired? You're not objective. You already made your profits and some amount of loss there as well. So you listen to yourself, and that's how you gauge. All right, this is really exciting. I'm happy to interact with you, ladies and gentlemen. Remember, every Thursday we have these sessions on a special webinar that helps you to be even more objective in your trading, to be even better in your trading. And let's meet again on the next Thursday next week. We have something also prepared for you, something good, and it's always a different topic, something different to make you even better. If it's your very first time, make sure you register to our classes, our trainings, and we can even help you with more content. And make sure you practice and practice and practice. Forex trading is a skill that you can only perfect by doing it, and it's not a one-day affair. You grow over it. Make sure you have a growth mindset. Keep on practicing, keep on being resourceful, and practice those things that we've checked out there, right? practice on all of them, and it will help you in your trading. Develop those qualities, become a successful trader. Thank you so much, ladies and gentlemen, and see you again on Thursday, same time. Bye.